Morena koutou. Welcome to today's Centre for Sustainable Finance drop-in session. Before we start the session, I'd like to acknowledge our Mother Earth and all of her creatures, and to wish goodness to all people who know the earth to be sacred and who work to restore and regenerate our place. It's my pleasure this morning to welcome two of those people, Shalini and Nayanisha from the Responsible Investment Association of Australasia. Shalini is the Head of Certification for RIAA and Nayanisha is the Head of Policy and Advocacy. At the Centre for Sustainable Finance, our purpose is to advance an equitable and inclusive financial system that enables a resilient and sustainable Aotearoa New Zealand. Our roadmap refers to RIAA on a number of matters, in particular the development of internationally aligned standards and investment product labelling, which is a key area where RIAA has been working and leading for many years in our region. RIAA is an early strategic partner of the Centre. Together we co-host the New Zealand Stewardship Code Secretariat, and we partner where appropriate on matters related to sustainable finance policy and standards development. As always, RIAA is an important membership organisation for professionals looking to build capacity and for organisations looking to seek external verification of the sustainable finance sustainability credentials of their financial products. Recently, there have been a number of key developments related to greenwashing regulation and product labelling in Australia, not least the government's recent budget allocation to the development of a national product labelling regime. We are very pleased to have Shalini and Nayanisha here today to provide an overview of these developments and what they may mean for New Zealand or Australasian investors and market participants. Shalini and Nayanisha will be speaking on behalf of RIAA and sharing the views of RIAA, not necessarily of the Centre for Sustainable Finance. But we do very much welcome them and the opportunity to learn more about the RIAA position on these developments. Please note you can submit questions to Shalini and Nayanisha in writing today, and they will endeavour to answer them, time permitting. And we also can respond by email after the call is over if appropriate. So with that, Shalini, over to you. Thank you.
Thanks so much, Jo, and good afternoon to all who are joining us today. Thank you for the kind introduction. It's a real pleasure for Nayanisha and myself to be here to expand on the policy work that RIAA is doing with regard to product labelling, to introduce RIAA's certification program and provide insights and observations from the activity that we're seeing around greenwashing. So let me share my slides to start with, and then we will kick off. Before handing over to Nayanisha to take you through our work with government on product labelling, I'd like to provide a brief disclaimer that the information presented to you today does not constitute investment recommendations or advice, and a reminder to seek professional financial advice before making any investment decision. So over to you, Nayanisha, to kick us off.
Thanks, Shalini, and good afternoon, everyone. Thank you for the kind invitation from Jo and CSF, and it's great to be here talking to you today. So I'm going to cover off on some of the recent announcements by the Australian government around product labelling. And you'll see in, Shalini, if you go to the next slide. Great, thank you. We had this year the federal budget allocated specific funding for both ASIC, the corporate regulator, and Treasury to consult on the design of a product labelling regime. This was a very welcome announcement for RIAA, who has been campaigning for a legislative product labelling regime for a number of years. The draft sustainable finance strategy that the Australian government released at the end of last year anticipated this, which we were very supportive of. But also we were cautious about, some of the risks that I'll go into just in a little while. The federal budget this year was very focused on sustainable finance, including further enforcement and investigation around greenwashing, green bonds, data improvement, and international engagement. And you probably have heard about the sustainable finance taxonomy. The work in Australia has progressed, and we're really pleased to see that there is development as well and progress in New Zealand around a taxonomy, which is vital for attracting capital for these net zero and decarbonisation projects. If you go to the next slide, thank you. Like I said, RIAA has been calling for a product labelling regime for a number of years, and Shalini later on will go through the more detail of what our certification program looks like. But effectively, the certification program has done a lot of the work of the labelling regime, and what it has done is effectively provided a way of checking whether investment products are meeting a standard before they can be really marketed as a sustainable impact, a specific product. For us, we have seen globally that there are product labelling regimes being implemented in the UK, the EU, and a lot of the work that we do maps to those requirements. And if done well, it is that the critical step in improving transparency. And a legislative regime also provides the authority that's needed for the whole market to really lift its standards and have a shared understanding of what is required before certain terms are used and before consumers are being sold products which are purportedly aligning to their values. And it's through the government that we get the consistent policy across the market, as well as the accountability through the enforcement mechanisms as well. Like I mentioned, RIAA does recognise that there is a risk in the government creating a brand new labelling regime. RIAA has been doing this work in the certification program for over 18 years. RIAA has been also around since 2000, so it's a key part for RIAA is to ensure that that standard is not only maintained, but is then shared across the market as well. So we want to make sure that the industry initiative through the certification program is actually a potential solution for the government who is looking to implement this. We do a lot of work talking to ASIC, talking to Treasury, specifically around ensuring that a legislative regime can be adopted quickly and efficiently, but also the resources are used appropriately, considering that there is a lot of work and a lot of industry that has adopted it. Next slide. Our ask for the government since the draft Sustainable Finance Strategy was released last year was for the government to endorse the framework that the certification program has implemented as the basis of the product labelling regime, and to resource RIAA to expand its certification program and to develop the labelling regime with the oversight of government bodies and consultation with industry, as well as to appoint RIAA as the service provider for the finalised product labelling regime. We've been discussing this with government for since December last year, and it is really around ensuring that we have a product labelling regime that is adopted across the market from day one, and that the work that has been done so far through RIAA is maintained and uplifted. And I'll speak a little bit more about some of the specifics on the next slide. So, like I mentioned, RIAA has experience with managing the certification program, which has been going on for over 18 years. At present, and that data is as of 30 June, we have 343 certified products. You'll see that there is a number of products that are available in New Zealand and for New Zealand only, as well as over 64% of all KiwiSaver capital is in certified funds. So really it is a market leader, and it is also setting the standard in what responsible investment products should look like. I'll note the asterisk there around the KiwiSaver capital. That's because we're in the process of this year's benchmark report. So that one there is, that one is potentially going to change, but that will be updated in the benchmark report 2024. The certification program, which Shalini heads, maps to the international regime. So we work closely with different bodies internationally, but we also make sure that, what we're doing is mapping to those regimes, and we're having those discussions with government as and when necessary. And we've also elevated the standard of responsible investment. So a key area, for those that I haven't met on this call, my background is with ASIC. So I've done a number of law reform policy measures with Treasury. And one of the things that, from my experience, is that it is important to ensure that any new law, any new policy is able to be implemented from day one, and is also able to be used, and for the market to be able to use that, to be able to use a DU regime. It doesn't always happen, but I think that is a key area where RIAA adds value in that experience, but also providing the practical reality of what a product labelling can do for industry and for investors. When something is accepted by the industry and a new law or policy, it usually means you end up with a swift adoption of a government regime. A lot of that work will come through consultation, but we also want to make sure those policy settings are really accurate and also able to be used and practical. That was a pretty quick overview. Oh, there's a question about the slides being available. We're happy to share the slides. So we will provide them to Joe after the session, and they can be circulated. But that is a quick overview of the work that we've been doing with government in policy and advocacy around product labelling. It is a key priority for us this year. We see this as an excellent opportunity to progress sustainable finance in Australia, and it's also consistent with some of the submissions that we've made to the New Zealand government as well, particularly the FMA. So it is, like I said, we are looking forward to working closely with both industry and government on this space. Shalini, I'll hand over to you to talk more about certification. Thank you.
So much, Nayanisha. So in this next segment, I'll introduce the certification program in a bit more depth and take you through parts of our work that really most closely relate to some of the greenwashing activities we've seen of late in the Australian region, and provide some observations along the way. So the RIAA Certification Program for financial products verifies them for an investment style and process that systematically takes into account environmental, social, governance, and ethical considerations, and the reliability of that investment process. So financial products must also meet a series of operational and disclosure requirements to achieve RIAA certification. And as Nayanisha mentioned, the program is one of the world's oldest. The responsible investment standard, which underpins the certification, draws on over 24 years of RIAA's history, market-defining research through industry benchmarking, consumer surveys, analysis of regulatory guidance, global collaboration, and the deep market knowledge of close to 600 members. So the standard contains eligibility criteria. It contains minimum requirements for certification and ongoing commitments that financial products must meet to maintain certification. Our certified products cover superannuation, managed funds, KiwiSavers, banking, and other products. And the program has been built, like Nayanisha mentioned, with global definitions and standards in mind, but taking a locally fit-for-purpose approach. And in May this year, we launched a classification system that acts as an overlay on the certification program, differentiating certified products by the approach taken in considering ESG factors and the degree to which sustainability is addressed or targeted. So we recently completed a desktop project to review similar schemes globally, and found that of the certification schemes around the world that do similar things, the German F&G Seagull is the only one that currently runs a classification system, recognizing that all of these other schemes essentially operate under product labeling regimes. So this is a bit of a busy slide, but as Nayanisha mentioned, we'll share it after the session. But this gives you a sense of how the certification and classifications at RIAA are structured. So a product must first meet all the requirements of the standard to be certified by RIAA. So this bit here. And their certification is then overlaid with one of 3 classifications on an opt-in basis. So the classifications are responsible, sustainable, and sustainable plus. The Sustainable and Sustainable Plus classifications apply to products that have positive sustainability objectives, portfolio and stewardship alignment with those objectives. And Sustainable Plus products demonstrate measurement, tracking, and reporting of progress against those objectives. So that's the delineation between the classifications in a nutshell. And so, like, as Nayanisha foreshadowed earlier, while we don't claim that our classifications are equivalent to any particular global product labeling regime, we have been able to map our approach to EU SFDR, UK SDR, and US SEC's rules with some level of interoperability. So in terms of the certification process itself and how decisions are made, a product provider first has to answer 140 questions through an application portal covering their responsible investment process, their approach to screening, organizational commitment to responsible investing, category-specific questions for banking and impact label products, for example. They then provide supporting documentation, for example, extracts of investment management agreements and latest portfolio holdings, etc. Our certification team then assesses the application and materials provided, conducts desktop research, requests further information as required, and gives the product provider opportunities to make improvements as needed. We also run the portfolio holdings of the products through partner research databases, prepare an assessment summary, and present it to a certification assessment panel. And this certification assessment panel, comprising 2 independent committees of RIAA members, make an ultimate determination against the standard, and they vote essentially on the approval of the product for certification. Once approved, an independent consultant confirms the product provider's claims in accordance with agreed upon procedures. And at the 18-month mark post-certification, a spot check is undertaken to ensure ongoing compliance and specifically of product labeling and claims within and ensure that compliance with the standard is maintained. So there are 8 criteria that comprise the standard, and we look at responsible investment practices from both an organizational standpoint as well as a product standpoint. At product level, the top of this slide, we look for product level responsible investment strategies that are formal, disclosed, consistent, auditable, and fit for purpose. And what this means is that when we look at product disclosure statements, fact sheets, web descriptions, and external facing policies, such as the ESG policy or the impact charter, we need to see that there is a consistent approach to how investment processes and practices are documented and how portfolios are constructed. We look for precise, unambiguous language and clarity for the audience of these documents. And when it comes to accounting for ESG on the top right, we look for a robust and consistent approach to incorporating ESG, following a trail of information to ascertain the robustness of ESG, RI, or impact process that is followed as part of portfolio construction. And once our analysts consolidate all the information from product documentation to marketing materials, they are then able to determine if product labels are indeed clear, honest, and not misleading, which is where you find that blue circle with a check mark on this slide. So I won't go into the detail of the other requirements for certification, as they are a little bit less sort of relevant to the topic today. But if we hone in on product labeling, to give you a bit of a sense of the core elements, labels are checked for whether they correctly reflect the ESG or sustainability characteristics or approach of the product as it is defined by the product issuer. For example, if terms like green, transition, or social are used in a product label, these need to be defined and substantiated, then explained in terms of how those attributes are embedded in the product's responsible investment process. We also check if portfolio holdings line up not just with stated exclusions and inclusions, but also with the product label itself. And discussions take place internally around whether additional explanations might be required for certain holdings based on a reasonable investor lens. And recognizing that some of these lines are quite subjective, our certification assessment panel engages in robust discussions with us to unpack minimum requirements and expectations and to build precedents. So aside from product name, any claim made is also tested to ensure that it's honest and not misleading and doesn't contain puffery or confusing or contradicting language, especially when a product uses qualifying statements. And the last point we have up there is that if there are sustainability or impact targets or aims that are set, product issuers are also required to report their progress and performance or outcomes, as well as their methodologies for measurement. So our approach to product labeling assessment for certification rests on these greenwashing protections. And they are the ASIC Regulatory Guide 65 on Truth in Promotion, Clarity and Communication, ASIC Info Sheet 271, which Nayanisha was heavily involved with, misleading and deceptive conduct, false or misleading representations, the FMA Guidance Note, Disclosure Framework for Integrated Financial Products, around substantiating your claims, how omissions themselves can actually be confusing or misleading, and disclosure expectations, and certain other greenwashing protections that are out there in the market as well, which are listed in the far right. So while none of these regulatory frameworks and guidelines specifically prescribe meaning to terms, over the years of assessing products with a view on local and international developments, and RIAA's mission of lifting standards, the certification program has accumulated precedents for certification decision-making on certain words and approaches used by product issuers. And two of those words are sustainable and impact. So for these terms specifically, we've included more prescriptive guidance on minimum requirements, all of which can be found on our website, available for you to review if you're interested. Okay, so now going on to some of the interesting events that have occurred in the last year and a half. These are some brief, restated and generalized examples of financial product features and claims in Australia where our standard was not met and where our regulator has also applied focused attention in recent times. So I'll just do a very quick walkthrough of each of these three examples and explain how what we've learned and how the certification program approaches this. So the first example is of a fund that claims not to invest in the production of nuclear weapons, controversial weapons, and armaments. The fund doesn't directly invest in those. However, it invests in an ASX-listed ETF that holds a weapons manufacturer. So during our portfolio holdings check that is conducted during certification, we've discovered that and we've had conversations with the product issuer about that. And that has led to additional disclosures around how exposures can actually in fact occur through the fund of funds approach to investment. And so the intent here is that the certification program can do one of two things. It then sort of either the product issuer chooses to relinquish a particular holding, or they choose to communicate a little bit differently so that there's no further, or it mitigates the risk of misleading any consumers or retail investors. The second example is of a multi-asset product, which claims to exclude casino operations and production of adult entertainment materials, as well as alcohol from its portfolio. What this multi-asset product fails to disclose is that the screening only applies to the public equities asset class and not to the other asset classes that form the multi-asset portfolio. And it also fails to disclose that the screening is in fact based on data provided by a third party, which also, again, only covers 70% of those public equities holdings. And so that sort of waters down the screen, which leads to the possibility of certain exposures that are claimed to be excluded entering the portfolio during a certification term. So this is then addressed with the product issuer as well. The third example is of a product that claims to be a transition product. And it claims not to invest in stocks that fall below a certain score within a low carbon transition management scoring system in accordance with a third-party data provider's methodology. An error by the third-party data provider was made where a few stocks that fell below the assigned score made it in when the screen was applied. And this was only discovered a couple of months later during a scheduled quarterly review. So this is a really interesting one where there needs to be some kind of line of sight and demonstration of how the governance of third-party data is occurring within the third-party data provider, which is a slightly trickier example, which we found a little bit more interesting to navigate, and which we have then introduced our product claims spot check as an overlay on the certification to help mitigate. So this same fund also states on its website that it will eliminate investment in oil sands and tar sands without further explanation or qualification. And so what it's not disclosed is the fact that it actually applies a 30% revenue threshold for exclusion of oil sands and tar sands production. So essentially what we have here is an example of a materiality threshold that has been applied but in the actual collateral of the product, it's not clearly stated that there is a materiality threshold in place. So there are a couple of useful links here which relate to publicly disclosed blogs that we've got on each of the greenwashing cases, as well as others that actually occurred over the last year. And that is linked here. So this will be shared afterwards. And there's also the definitions for responsible investment approaches, which was agreed as a global collaborative through a global collaboration where RIAA was part of that, but also the Global Sustainable Investment Alliance, CFA Institute, and others. And these are about definitions of terms such as stewardship, impact investing, screening, positive screening, best in class, etc. Okay, so basically, the challenges overall that we see in the certification program and that we see our regulators acting on as well are around product labeling concerns. And some of the common problems we see are misuse of terms in the label, lack of substantiation, companies in the portfolio that don't meet label definitions as outlined in their policies, and mismatch between labels and practices. For example, ESG leader funds that include the worst performers in the ESG scoring approach used by the fund. And even though that's small inclusion, it still nonetheless is a bit of a mismatch with the actual label of the fund. And what we've seen is that out of the 70% roughly of products that seek certification that are required to make changes before being certified, approximately 10% are due to these product label or titling concerns. And then another 30% of that cohort relates to reliability of representation. So some of the common problems we see there are loose and imprecise language, for example, exclusion of weapons, or saying no exposure to tobacco without defining, for example, the value chain activities. Vague claims such as fossil fuel free, lack of quantification of objectives, targets, and reporting on progress. For example, calling something a sustainable fund or a low carbon fund without really fully quantifying and setting objectives or targets and reporting on the progress towards achieving sustainability or a low carbon approach. Lacking disclosure of revenue thresholds or value chain activities for negative screening across the board, and lacking disclosure of the limitations in the use of third-party resources. For example, the scope of portfolio coverage when screening, which was one of the examples provided earlier. So hopefully this gives you a good sense of what we do and what we're observing through the program in Australia that may be of assistance to you in Aotearoa, New Zealand. And I guess just a final note that our annual conference in Auckland is coming up soon, and there we will actually launch a climate claims annex to clarify the program's approach to assessment of climate-related labels and claims that are made by product providers. And there'll also be an opportunity to workshop the use of the annex for financial products. Thank you very much, and back to you, Jo.
Kia ora, Shalini. Thank you both, Shalini and Nayanisha, for your insights today. It's always a pleasure to talk to you both. Thank you everyone on the call for your time. A recording of today's session will be included in our quarterly newsletter, so please look out for that coming up this week. And of course, we will look forward to seeing everyone on the call at the RIAA conference later this year. Thanks everyone. Ka kite anō.